So I finished this course recently about how investors should build their stock portfolios. It made me review my whole portfolio and it made me realize that I have so many mistakes and there were so many things that I was doing wrong. So I decided to share with you these ideas and my thoughts in this video with the hope that it will help you to review your stock portfolio and fix the mistakes if you have any. So if you are interested in this sort of information, then please keep watching this video. Hello guys and welcome back to my channel. My name is Anastasia. On this channel I talk about investing and especially investing for beginners. Recently I finished the course called How to Build Your Stock Portfolio on XTB Academy. And first of all I want to share with you two thoughts. First thought is it took me 3.5 hours to completely finish this course, and I'm gonna tell you about the main things together with my comments in about 10 minutes, and this is how long this video is going to last. So if you are appreciating me saving your time, then please click the like button because it will help my video to get promoted to the wider audience and it will also help my channel. And the second thought that I had is I can't believe that some people are still paying money for paid courses, especially the beginner investors. The information is out there and it's free, and I tried to take some courses in the past. I also watched a lot of YouTube videos and read a lot of blog articles, and I can tell you that XTB Academy is probably the best place and the best academy I found so far, and it is completely free. And a really cool thing is that you don't even need to register on XTB in order to see some of the courses. You can find the access to the academy on the website, but of course if you want to get the access to full courses you have to create a real account, but that as well is absolutely free. And since there is no minimum deposit amount, in my opinion it's worth registering there just to take these courses. In these 3.5 hours I've learned a lot of new things. The things that I'm going to tell you in this video are the main ones, but of course if you watch this course yourself completely you will find a lot of new information for yourself, I'm sure. There are other courses as well that are interesting for me and that I intend to watch, but this one for some reason grabbed my attention from the very beginning. So if you want to register on XTB, please use the affiliated link in the description box below my video. And if you want to watch more videos about XTB on my channel, then you can click this link here. I'm gonna attach the link to the playlist about XTB. Now this course was created by Chris Capr. If you don't know who he is, don't worry, I didn't know about him until I took this course. He has his own website and you can check it out. I'm gonna leave the link to this website in the description. He's a former broker on Wall Street. He also used to be a trader in a hedge fund, and so he is a trader with a very big experience. But some of the ideas that he's sharing in his course are logical. You don't have to be an experienced trader to understand these things, but for some reason I started to think about those things only after watching this course. So here are some of the insights that I had after watching this course. First of all, before you build your stock portfolio, according to Chris, you must have a goal. And the goal has to be very specific. So Chris says that this goal cannot be just, oh, I want to make more money, or I want to have some money, I want to make some extra money, I want to become rich by investing or by trading. This is not a goal because it is not specific. The goal must have a number, according to Chris. For example, you have $1,000 that you can invest now and you want to turn it into $10,000 in 1 year. Or you want to buy a house and you know that you can spend $500,000 on your house, so you have to save money for your deposit. Say the deposit has to be $50,000 and this is your goal. The main reason of why you must have a goal and you must have a certain number in your mind is because it will help you to take certain steps in order to reach that goal. If you have to make a lot of money fast, then your moves have to be riskier. If your goal is just to preserve the money, to save the money from inflation, then you don't have to invest into risky assets and you can just wait for the money to grow slowly. That makes total sense, right? Now, when I'm thinking about my portfolio, I can tell you honestly, I don't have a goal. I don't have a number in my head. And after watching this course, I was thinking about it. I was trying to come up with the number, but I honestly couldn't. And I think the problem comes from the fact that I have several portfolios. One is for my retirement age, one is for passive income, one is just a growth portfolio. And when I try to unite all these different portfolios, I cannot do it because each one of them has a different goal. But even these goals that I just told you, there is no number that can represent this goal in my head. So I'm working on it. I agree with Chris that this definitely makes sense and this is what you have to do. I'm working on it and I'm trying to come up with the number. Strategy, again, is very important, and your strategy has to depend on your goal. Since I don't have a goal, I don't have the exact strategy. So I can understand the risks that I'm comfortable with. I can also kind of understand the strategy that I have, but nothing in my head is in concrete. I can change the strategy. I feel like I'm flexible, and maybe I'm too flexible. I do some impulsive moves from time to time. I buy some meme stock, I buy some new crypto coins, and this is not the part of the strategy. This is just my emotions. And I feel like if I had a strategy, the exact strategy, it would help me to put all my steps and all my moves in my investment journey in order. Now there is no order, there is a total mess. But there is one specific thing that I wanted to share with you, one thought. Chris says that buy and hold is a very bad strategy. And before I started investing, there were so many YouTubers and so many bloggers that said that this is all you have to do is just buy and hold. But what Chris says, and again it makes sense, he says, if buy and hold was the best strategy ever and if it actually worked, then why would there be so many analysts and active managers of funds working on Wall Street? Surely these people have to do something, and if their task was to just buy and hold, they would lose their jobs. So instead of just buying and holding your stock blindly, what Chris offers is to try to manage your risks. He gave a very simple and clear strategy of how to manage your risks. I'm not gonna cover this topic in this particular video, but if you want to hear it, then you can register on XTB, go to the Academy and watch this course yourself. Highly recommended. Okay, the next site is about risks. When I think about the risk, I straight away think about the risk score on eToro or the risk score on Vanguard, and I think that my risk that I am comfortable with is 3 to 4. But what do these numbers actually represent? Well, nothing. All I can say is that my risk has to be somewhere in the middle. I don't like very risky funds, and I also don't want to wait for low risk funds to grow. What I liked in this course is that Chris determines 4 types of risks, and I'm gonna tell you about each one of them separately. The first risk is time, and that's something that I haven't really thought about. So what he says is the longer you hold the stock, the higher risks are. And this is completely opposite to what I used to think. Well, I used to think that if I buy the stock and I hold it for a long period of time, then the risks of the price of the stock going down are low. So basically, the longer I hold, the better. But what Chris says is that that's not the case. The shorter you hold the stock, the better. Because if you hold it, for example, for a week, then there is only a certain number of events that will be able to influence the price of your stock. If you hold the same stock for 10 years, there will be many events, including the political, economical, and other changes that will happen in the space of 10 years that will affect the price of your stock. Look at the pandemic, for example. No one thought that the tourism-related stock will be influenced so much. Everybody predicted the growth, but no one could predict the pandemic. And I guess this is what Chris was talking about. So opposite to the common opinion that the longer you hold your stock, the better, and the lower the risks are, Chris says that it is completely opposite. And I'm not saying that you have to hold your stock for several minutes, because in several minutes the price can go up and down, you cannot predict that. But it is much easier to predict the price of the stock if you want to hold it for several weeks or for several months, rather than to hold the stock for several years. In this regard, I am going to make some changes to my portfolio, because there is some stock that I don't think is going to perform well in the long run, but I still hold this stock because, well, I just don't know what else I can do with it. One example I can give you is Coinbase. I think the price of the Coinbase stock is going to grow because of the bull market and because of the price of Bitcoin growing and growing. But in the long run, I don't think Coinbase is going to show good results because of the high commissions that they charge and other alternative options that are appearing all the time. There are new and new exchange platforms that are appearing, and they are much cheaper than Coinbase, and they also offer a bigger choice of coins, much bigger. The second risk that Chris is talking about is age. This is something that I've covered in my other videos. This is a very simple thing to understand. The younger you are, the higher the risks you can take on. If you are old and you know that you will need to use this money that you've invested in 5 years, then you cannot take higher risks, because if the price of the stock will fall, it will have no time to recover. And analyzing my stock portfolio from this perspective, I understood that I can take higher risks because I am relatively young and I still have a long time to go until I retire. So for example, on Vanguard, I invest into a life strategy fund that consists of 80% equity and 20% bonds. And now I think that I could have easily invested into 100% equity life strategy fund, because the chances of it growing faster are higher, and at the same time I still have 30 to 40 years until I withdraw this money, so my risks of losing money on this fund are pretty low. And the last thing to mention is debt. Chris says that there is good debt and bad debt. Good debt is something that you have to pay less than 10% of interest rate per year. Bad debt is something that you have to pay more than 10% interest rate per year. And again, when I analyzed my situation from this perspective, I realized that I'm actually okay because I have no bad debt at all. He says that bad debt is important because if you have bad debt, and if you have a lot of bad debt, then it will eat up the profits from your investment. So basically you have to make more than 10% per year in order to have any profits at all. And if we say that S&P 500 on average grows by 10% per year, well then if you have a lot of bad debt, then you will never make money, because all you will do is cover your debt and won't have any profits. Good debt, on the other hand, is a very good thing because it gives you the opportunity to use the leverage, but again, even the good debt has to be used with a lot of caution. But anyway, in my situation, I have no problems with that whatsoever. So now I've identified my problems in my stock portfolio. I still have to work on my mistakes and try to fix them. I guess it will take time, and I don't want just to plug the number out of my head without having a good understanding of why I need this exact number and why I came up with this number. But as soon as I come up with the exact strategy and the exact number, I will definitely let you know in my next videos, so consider subscribing to my channel if you don't want to miss that video once it's out. That's it for today, guys. Thanks so much for your time and attention, and I hope to see you soon in my next videos. Bye bye!